Hi and welcome to the Market Alert for Thursday, the 11th of November 2021. So yesterday the main headline is gold and the dollar soar as CPI surge sparks Fed faux pas fears. The straw that broke the camel's back is the transitory narrative, no matter how many times the establishment types or repeats it. We all know that once inflation takes hold, prices never revert back to their former prices. The only thing that's undervalued in this world and is at 42-year a low of 42 years is silver. It's what I mean by 42 years lower, it's 60% cheaper than it was in 1979 when it hit $50 an ounce. That's the only thing on this planet that is cheaper and undervalued. Everything else is dearer than 1979 or this time last year or this time last week, given the fact we're in a hyperinflation situation. The Financial Times reporting on this as well. US consumer increases at fastest pace in 3 decades. It may be a surprise to most people, but the Fed are actually doing this on purpose because they're trying to inflate the way out of the debt. They know when they come to taper, the stock market's going to collapse. So the only other way they can do this is to hyperinflate, and that's what they're doing. It's just smoke and mirrors as usual. They were hoping for this from 2008, but of course the banks kept the QE money. It never went to the consumer. Now with furlough and COVID, they were able to do this, and now they've got the hyperinflation that they wanted way back then. Other news today, we've got the prelim GDP figures from the UK, 5.5, previously 1.5. This is a quarterly figure, and it's likely to be around the 1.5, if not less. French bank holiday today, and US as well, all in observation of Veterans Day and Armistice Day here in the UK as well, but we don't have the markets closed or government bodies closed. And then we've got the EU economic forecasts as well. So let's have a look at the markets interpretation of what happened yesterday, and you can see in the Dow that we had a down day down to 50% retracement in the fibs that we drew in yesterday. Markets found support on this level to probably move back to the upside. What I would be keen to do here, which we do every time we get into all-time high and a pullback, is to see where the resistance is on the upside. So these are the numbers that I would be looking at. So I'm just going to remove a few of these just so that we can see what we've got there. So initially we've got the 50 and 38, and if it gets through this, then I will just add them back, but it just makes it a bit clearer to see. So yesterday all was going well. The market moved higher, then traded sideways, then moved higher. And then in the second 30 minute of the session, the market just sat on the 200 MA and then eventually broke and the market moved lower. I think the reality kicked in that, inflation isn't going to be transitory. These morons at the Fed actually realise now that that's the case. Meanwhile, in the DAX, not as big a sell-off, obviously, because the market was closed. It was on the electronic market when the Dow went down. And again, you can see we're now more or less in a sideways move with an attempt to move back to the upside. Again, I would be inclined to draw in. We've got the all-time high. And if I can do this, let me just widen this out a bit and move it over so it can expand the bars a bit. And again, from this high down to yesterday's low, draw in these fibs and make notes of these. Like I say, it's because the market range is so tight here, it makes it a bit difficult to actually see them. There you go. I don't think I can move that over anymore. No. So these are the levels, but like I say, you can erase them and then just add them back as go through the day. Or one other thing you can do, so you can see these more clearly, is to go down to a 30-minute chart. There's the all-time high from Tuesday. And we've got the low here, and then you can just draw the fibs in so you can see them. So from this high down to this low, and there you go. They're all nice and clear and taking you back to that all-time high as well. So you can see where you are. The 78 ties in with yesterday's high as well. So again, coming down to a lower time frame, whether it's a 60-minute, 4-hour, you can actually get a lot more clarity on where the fibs are on the chart, and then you can reset the chart and you can see exactly where you are in the bigger picture. In the 2-minute yesterday in the morning session, the market moving lower, and then we had a bit of a bounce at 9.44, which was interesting. It came out of nowhere. This was an interesting one because we sat on yesterday's or the previous day's low, on Tuesday's low. We had demand and we had some buying coming into the market there. The market wouldn't break the low, as I mentioned in yesterday's alert and many previous ones. The low is very important, and they just drove the market back up off this low, and from here back to here you'll see the market stop at 78% before it then went sideways. So quite a predictable pattern there. And then in the afternoon the market just moving higher with the Dow after the inflation numbers, which you can see there. The German market wasn't as impressed, but soon regained support at the close, and then eventually moved to the upside. No signals for the afternoon, and then overnight prices have drifted lower, but then since found support, closing back above the DP level now, and nowhere near yesterday's low. We're off that at this point. A good 60 to 70 points off the low of yesterday. And finally, in the metals markets, well, it was a good day. We got above $25 an ounce, and then they moved the market back in the silver market. Just have a look at this in the 30-minute, and you'll see they're just shot up and then gave back 50% of its move, but is now attempting to move back to the upside. Like I say, most undervalued asset on the planet is being suppressed, manipulated because of its monetary value, which is why it is 60% cheaper than it was in 1979. It should be over $100 an ounce, and actually a lot higher than that, accounting for inflation. But of course, it's easy to manipulate something that would actually destroy the financial system. Keep the lid on it. Gold also higher yesterday as well. You can see breaking through the 1834 level, and I think it's a 4 or 5 month high for gold, maybe even 6 months, which you can see there, 1868. Need to get through that 70 and head back towards the $2,000 range. But yesterday driving through the 1834 with no problem. And what was very interesting is that the dollar actually moved higher yesterday with the metals as well, but it's now starting to struggle a bit overnight. So there's a bit of a disconnect in the relationship between the dollar and gold at the moment, which is interesting. But then we started to see this over the last couple of weeks, haven't we? If you go back and look at the market alerts where we spoke about this, when silver was moved lower, the dollar moved higher, and then it sort of became the same way. It was quite odd. So yeah, this is very interesting. But the dollar, well, really it's heading south, isn't it, as we start to see the hyperinflation really take a hold. So there we go. That's a quick roundup of yesterday and today, and what to expect today as well. Like I say, there's not much news, so we've only got the prelim at 7 a.m. and then holiday for US government bodies and the French as well. Okay, that's it. As ever, thanks for watching. See you in the next.